Good evening to all of you. Today I, Manvi Bansal of DAV Public School Amritsar, is here before you to provide you with a short insight into the world of share market. A small disclaimer that this video is purely for educational purposes and I do not recommend or influence anyone to uh, listen to my advice. So please keep this in mind. This is purely for educational purposes. The first example I've taken is Dabur India Limited. Let's take a look at the market cap, ROCE and ROE of the company. The market cap is at 98 crores, ROC at 22.7% and ROE at 19.5%. All three of them are quite high, which is a good sign. The promoters holding are at 66.2%. That's quite high. It means that the promoters have very good faith in the company. Let's take a look at the various ratios of the company. We have the ratio chart in front of us. Let's take a look at the PE ratio. The median PE is 49.2. However, the current price is at rupees 557, which is very costly. Let's take a look at the price to book value. The median price to book value is at 12.8. However, the current price to book value is 10.4, which is a bit below. So yeah, I guess that's a good sign. Now let's take a look at the balance sheet of the company. Here we can see that the borrowings of the company are increasing. They are decreasing at some points, but they are increasing as we can see as of September 2023. And the other liabilities of the company are also increasing. So it may not be a good sign to invest in the company. Let's take a different company. For this, I'll be taking Lux Industries Limited. We have the charts of the Lux Industries Limited in front of us. The market cap of Lux Industries is at 3,909 crores. The ROCE is at 12.7% and ROE is at 9.97%, which are quite low as compared to the Dabur company. The promoters holding, however, are a lot higher at 74.2%, which is a good sign. It means that the promoters have very much faith in their company. Let's take a look at the various ratios. The 10 years ratio, the PE ratio, the median PE ratio of 10 years is 27.1. However, the current price is at 1300. It means that the share is very costly. Now, the price to book value of the company is 6.8. The median is 6.8. However, the price to book value is 2.62, which is low. Let's take a look at the balance sheet of the company. For this, we can see that the borrowings of the company have decreased, as we can see, and the other liabilities of the company have increased, which might not be a good sign. So we can say that, yeah, both of these companies are good to invest, however, they are very costly. So, as a beginner, we should look for some cheaper companies before diving straight into the big companies. Now, I have the graph analysis of Dabur India Limited in front of me. I have opened this on TradingView app. As the bluish line you can see, it is the DMA, that is the daily moving average. As we can see that most of the candles of Dabur India Limited are above the daily moving average, which means that it is a growing company and it promises us high returns. And in the December, that is the latest data, we can see that the green colored candle is quite big, which means that it's an upward trend. It is in the bullish trend and it would be a good sign to invest in this company. Now I have in front of me the chart of Lux Industries. As we can see, the bluish line is the DMA and it is a lot higher than most of the candles. Let's take a look at the latest data. In the latest data, that is of December, we can see that the candles are a lot lower than the DMA. That it means that it's in bearish trend, and as a growth trader it would be not wise for me to invest in this country. So yes, I'm talking from the point of view of a growth investor, and I'll only be investing if I see growth potential into the company in a shorter period of time. So as we can see, this does not promise us any growth anytime soon. So will not be investing in the Lux Industries. As a growth trader, I would definitely go for the Dabur Industries, as we have seen it was promising us higher returns, and the value of the share was much cheaper as compared to Lux Industries. I have learned all of this under the supervision of Dr. Shunil Tripathi ji in his internship of 7 days. And again, a disclaimer that this is purely for educational purposes and this is not professional and anything. This is just for educational purposes. Thank you so much for paying your attention.